second event in the MCN 2014 Advocacy and Training events. We're really lucky this morning to have Nan Madden, Director of the Minnesota Budget Project, join us and help us understand the state budget. A few things before we get started. We do really want to invite you to join the Twitter conversation. You can follow the Budget Project at MN Budget Project and join us in the Twitter conversation through the hashtag #UnderstandTheMNBudget. Just a bit about public policy at the Minnesota Council of Nonprofits. We really work to advance the sector, build capacity, and mobilize our members. We support individual nonprofits and Minnesota's nonprofit sector to be their own voice in the public policy process. And some of the ways that we do this is through providing trainings, a lot like this, on advocacy and lobbying. We serve as a resource to policymakers on the nonprofit sector and advocate on important issues that affect all nonprofits in Minnesota. Things like incentives to charitable giving, nonprofit tax exemptions, lobbying rights, and election activity rights. You may have seen this already, but I also wanted to remind you about our upcoming trainings and events. The next one is on April 3rd from 10 to 11. It's also a webinar. It's on how a bill becomes a law. You can sign up for that today through the link at the bottom. And join us for the future events as well. They'll be great. And now getting to today's presenter, Nan Madden. Nan has been the director of the Minnesota Budget Project since 1999. The Minnesota Budget Project is an initiative of the Minnesota Council of Nonprofits that provides independent research, analysis, and advocacy on budget and tax issues, emphasizing their impact on low and moderate income persons and the organizations that serve them. Nan has authored numerous publications on fiscal issues as well as economic self-sufficiency. She's a great budget spreadsheet reader and fiscal and tax policy expert and testifies quite frequently at the legislature on tax and fiscal policy issues. And I'm Renal Ray. I'm the public policy advocate at the Minnesota Council of Nonprofits, and I'm going to be joining you today. And we invite you to send in your questions throughout the presentation as they occur to you. If you have comments, feel free to share those, and we'll try to work those in and ask those questions. Today's learning objectives are really about learning what the state's latest economic forecast means for state and budget decisions and understanding how state funding is raised and spent and what the process will be for tax and budget decisions this session. So if you have questions, send them in if you're on the webinar. If not, you'll be able to email both Nan and myself after the presentation so we can answer those questions for you. And now I'll turn it over to Nan Madden.
Great. Thank you, Renal, and thanks everyone for joining us this morning. Before we kick off on looking at some budget information, I just want to mention about why it is we do this work on the state budget and why we think it's important for nonprofits to be engaged on those issues. We really think that the public sector is a partner with Minnesota residents, with the for-profit sector, and the nonprofit sector in creating a society with a high quality of life and in which all people have the opportunity to succeed. Our state and our economy benefit from public investments that include everything from our physical infrastructure, the human capital of our residents, protecting the safety and well-being of people and property. It includes how we care for each other and ensure all people can live in dignity, as well as our cultural and environmental amenities. Because of the importance of those investments, public investments for our quality of life, we think it's important for as many folks as possible to be part of the discussion about setting our state budget priorities. All right, let's take a look at what our current state budget situation is. Right now, the forecast for the state's budget looks good. We recently saw the state's February forecast, and it found that Minnesota has a $1.2 billion positive balance for the current two-year budget cycle. We call that fiscal years 14 and 15, and a $2.6 billion positive balance in the next two-year budget cycle, 16-17 biennium. Now that future year number might be more accurately thought of as $1.5 billion if we include the impact of inflation on the spending side of the state's budget. Now, the state's forecasts are a really important tool for understanding our situation, and it sets the baseline for any tax and budget decisions that policymakers might like to make this year. The forecast is prepared 2 times a year by a state agency called Minnesota Management and Budget. There's a November forecast, which sometimes comes out in December, but is still always called November forecast, and one that comes out in February. And what the forecast does is it takes a look at our current system of spending and our current system of tax laws, as well as economic projection of what we think, what the experts think the economy is going to do, because economic conditions do influence both the revenue and spending side of the budget. And basically it says, if we kept all of our spending and tax laws the same, and if that economic projection is correct, how much money would the state bring in, how much would we expect to spend, and how do those line up? So that $1.2 billion balance for the current budget cycle, what that means is that if we kept everything the same, all laws the same, and if the economic projections are right, by the end of the budget cycle on June 30th, 2015, we would expect Minnesota to collect $1.2 billion more in revenue than it spent. So it's not money that's already in the bank, but a projection of what is likely to happen in the future. So any budget decisions that are made this year will use this forecast as a measuring stick, but it's also important to know that Minnesota runs on a 2-year budget cycle, and we actually, policymakers did the work to pass that budget last year. So any changes to tax law or to spending this year will just be adjustments to that underlying budget. We don't need to pass a budget again this year. So now I'm going to show you some slides that take a look at how the state's budget is organized, what revenues are brought in, and how we choose to spend those dollars. So this is based on the budget passed last year. These slides are actually based on the November forecast, but the broad parameters still hold with the February forecast. If we look at the entire state budget, it's about $69 billion, and the state organizes the budget into different funds. So just like in your personal life, you might have a savings account, a checking account, maybe you have a retirement account, a 529 plan to save for college. You put your money in different funds, and those funds may have different requirements on them. The state does something similar. The largest fund, and where the state has money that there aren't any strings attached for the most part, is the general fund. And that makes up 53% of the total. And those numbers I just gave about the forecast, the $1.2 billion surplus, that is referring to a $1.2 billion surplus in the general fund. Usually if people aren't specifying a particular fund, it is the general fund that they're referring to. And that's where we spend most of our time over the legislative session talking about how to allocate those dollars. Now, all the other funds are ones that have rules attached to them. There's rules about what kind of money goes in and what kind of spending can come out. The largest of these is federal funds. The state gets 29% of its budget in this budget cycle from the federal government, and those can be for things like health and human services, for transportation, for welfare to work. And while it may be the case that the state has some choices to make, such as exactly what services we want to cover under medical assistance, for example, we can't take those medical assistance dollars from the federal government and spend them on roads, for example. So there's some strings attached there. Then the next largest category is transportation and transit funds. In our state, transportation is largely funded by dedicated funding sources, such as the gas tax and the excise tax you pay when you buy a car. And then there's some smaller funds as well. So let's look a little more closely at that general fund and look at where the revenues come from. So the general fund for this budget cycle is projected to be a little over $39 billion. And the largest revenue source, making up about half of the total revenue, is the individual income tax, followed by the sales tax, which brings in about a quarter. Everything else is much smaller. Now, often people are expecting, when we talk about taxes, that we talk about three taxes. It's the income tax, the sales tax, and the property tax. In Minnesota, the property tax is largely a local revenue source. The only part that goes to the state is something called the statewide property tax. That's paid only by businesses and cabins. That goes to the state. Otherwise, property taxes largely go to counties, cities, school districts, and other local units of government. We are fortunate in Minnesota that we know more than people in other states about how we share the responsibility for paying taxes among people with different income levels. And that's because the research people over at the Minnesota Department of Revenue do a very comprehensive study every 2 years called the Tax Incident Study, where they look at all the different taxes at the state and local level, so this includes property taxes here, and estimates what share of people's incomes are paid in those state and local taxes. And the reason it's called a tax incident study is it tries to measure where the tax ultimately lands, which is not necessarily the same as who is legally responsible to pay that bill. So for example, if I'm a landlord and I own an apartment building, I am legally responsible to pay the property taxes on that building. But I'm probably not going to take that entire property tax bill out of my own profit. I will probably raise the rents for my tenants a bit more than I would if I didn't have to pay that property tax bill. So my tenants are all paying a portion of that property tax. And if I have an employee, say, who takes care of that apartment building, I'll pay that person less than I would if I didn't have to pay that property tax bill. So that employee also is bearing a share of that tax responsibility. So that is what the tax incident study measures, is the ultimate, where that tax ultimately lands. So it shares that property tax bill across the owners, the customers, and the employees. And all business taxes are reallocated through a formula in that tax incident study. So something you'll notice if you look at this chart, and something you probably heard a lot about in the last election cycle, in the last couple of legislative sessions, this is data from 2010, is the fact that while we have a relatively flat tax system, that it is the case that your taxes as a share of your income tends to go down as your income goes up. And the category of folks who pay the smallest share is the 1% with the highest incomes. And this has been a big issue and has gotten a lot of attention in the past number of years. Another thing to know about our tax system is that while that overall total percentage of income paid in taxes tends to be fairly similar across income levels, the way you pay your tax bill does vary quite dramatically by income. So this chart is the same data as on the previous slide, but now it's breaking up that overall tax bill into different pieces. So you'll see on the bottom, the blue is the individual income tax, which I think, as most people are familiar, rises with income. And you may even get a refundable credit if your income is low, and that's what's happening with that first bar there, where you see a negative amount on the individual income tax. And that's called a progressive tax, when the share of income that you pay in that tax rises as your income rises. All other taxes, with the exception of the estate tax, are regressive, meaning you pay a larger share of your income towards that tax when your income is low. So if you take a look at this slide, you'll find that if your income is kind of low or moderate, the sales tax is actually the biggest part of your tax bill. followed by the property tax. In the middle income ranges, that's the higher piece, and then on the high end of the income scale, it's the individual income tax. Okay, so this is data from 2010, and whether this is the right distribution of taxes and whether we should have some changes to it has been a big issue of discussion, especially last year. And last year in the 2013 legislative session, there were some pretty major changes made to the tax system, both to make it less regressive and to raise more revenues, since it had also been the case that the state was facing frequent budget deficits over the last decade or so. So I'm going to show you a chart that shows the impact of that tax reform bill that was passed in 2013. So the blue here is that same data that we've looked at the last two slides, what share of income people of different income levels were paying in total taxes. The only difference is now we've switched from 2010 to 2015. And then the gray shows what share of income people will be paying in taxes, including the impact of the 2013 tax bill. And you'll notice that the tax bill was quite effective in moving the share of income that the highest income Minnesotans pay closer to the average and to what other Minnesotans pay. You also see there are some tax increases on the lower end of the income scale, and the largest contributor to that was the increase in the tobacco tax. For folks in middle incomes, there's not much change, and when you take out the impact of tobacco tax, so if you're a non-smoker, you may actually be seeing a reduction in taxes because also that tax bill included some pretty substantial increases in property tax refunds. So maybe as a quick reminder of the things that were in that 2013 tax bill that contributed to this effect, what was called the fourth tier, so a new income tax rate on the 2% of Minnesotans with the highest incomes. There was ending of many corporate tax preferences, number of measures to reduce property tax pressures, including increases in property tax refunds for homeowners and renters, increased funding to local governments with the idea that since local governments raise much of their funding through the property tax, if they have more money from the state, they do not need to raise as much on the property tax. We did some modernization of our sales tax system regarding internet sales and digital goods, and also created, also subjected 3 business-related services to the sales tax, and we increased the cigarette tax. The cumulative effect of that bill was to raise about $2 billion that filled in a deficit and then also was invested in K-12 education, higher education, economic development, and other areas of the budget. Okay? Now, while taxes are the largest revenue source for government in Minnesota, it's not the only source. So we also like to, when we're trying to understand the size of government in Minnesota and how it has changed over time, look at a measure called the price of government, which is also calculated by Minnesota Management and Budget. And it's simply a measure of all revenues going into state and local governments, not just taxes, but also tuition at the public universities, fines, permit fees, basically however it is paid in to local government, and measures that as a share of income. And I'm going to show you a slide of how that has changed over time. So for much of the 1990s, that price of government measure was around 17.5%. Today, it's 15.6%, and it's projected even after the effect of the budget passed last year to drop further to 14.8% in fiscal year 2017. And I believe that's the second lowest it's been since this measure has been calculated. So state and local government is a smaller share of the economy today than it was for most of the 1990s. All right, so we've been talking for a while now about revenues and money going into the state and local governments. Now we're going to switch gears and take a look at spending. So here we are, we're back to the state level, we're back to the general fund, and here is where the money goes. Largest part of the state's general fund budget is K-12 education, followed by health and human services, And while they get equal billing in its name, Health and Human Services, the bigger part of that definitely is health care. Third largest, what us budget geeks call property tax aids and credits. That includes the state-paid property tax refunds for homeowners and renters, known more commonly as the circuit breaker and the renter's credit, but also general state funding to local governments, which is known as local government aid for cities and county program aid for counties, and then higher ed. Those four largest categories make up 86% of the overall state budget, with other areas of the budget important but much smaller. Now the picture changes a bit if we bring in those other funds, so federal funding, other kinds of dedicated funding. So if we look at all funds, you'll notice that Health and Human Services and K-12 education swap places, reflects the fact that, for example, in our medical assistance program is about 50-50 shared responsibility in funding between the state and the federal government. We tend to get some significant federal dollars for Health and Human Services spending. And then transportation, which is also a funding area that relies primarily on dedicated funding sources, jumps to the third largest category. Now, depending on what area of the state budget that you are most interested in, sometimes looking at the general fund, which is, again, how much of the information tends to be presented, gives you a pretty good sense of the overall spending in that category. But there are others where looking at all funds is probably the better way to understand what is going on. And I would say transportation is one of those, but also economic development and some of the environmental issues are ones where federal dollars or dedicated funding sources are also an important part of that picture. So I'm now going to switch gears and talk a little bit more about the decision-making process and some of the priorities that have been set out by policymakers this year. I do invite you, if you have questions about any of the content we've covered so far, please go ahead and submit those. And we'll also have some more time for questions at the end. So as I mentioned, our state runs on a 2-year or biennial budget cycle. We're in the second year of decision-making about that. The legislature needs to pass the budget in the odd-numbered legislative session, so they did that in 2013. And in even-numbered legislative sessions, the legislature tends to focus on passing the capital budget, or what's called the bonding bill. And what that is when the state invests in primarily physical infrastructure, roads, repairs and buildings at our public colleges and universities, various sorts of things that are about capital, not about operating. And it's called the bonding bill because most often the way those things are funded is by borrowing. The state borrows by issuing bonds. The state has a good credit rating, so it pays fairly low interest. And sometimes the state will also do that borrowing on behalf of local governments because that brings the overall price down for those projects because the state has a stronger credit rating. Now, it's often the case that in the odd-numbered legislative sessions, when they focus on the budget, they may also pass a smaller bonding bill. And in the even-numbered legislative sessions, the legislature will pass a smaller set of budget changes, often called the supplemental budget, because it's in addition to the budget that was passed in the previous year. Our Constitution does require us that our budget be balanced by the end of the biennium. So it is the case if you come into the second year, into the even-numbered legislative session, and the state economic forecast shows a deficit, that policymakers do need to act to bring that budget back into balance. So with the budget already set last year, and with this positive economic forecast we have, policymakers will be deciding this year what they want to do, if anything, regarding that $1.2 billion positive balance for this budget cycle. So they're already having a discussion about what portion of that they might like to spend on tax reductions, what portion on new spending items, and then also having a discussion of whether we should put some more money aside in our state's budget reserves, which is essentially our savings accounts for when we have tougher times down the road. So it is often the case that, and it is certainly the case in the budget setting year, that the governor gets to lay out a set of priorities first, but the governor does not have the authority to enact any budget and tax changes. Those need to be passed by the legislature. And so we have seen Governor Dayton's supplemental budget was released last week, and the priorities he laid out in that supplemental budget are these. First, $616 million in tax cuts the governor has proposed. That includes repealing those 3 business service-related sales taxes passed last year, a number of tax reductions, income tax reductions that come under the name of federal conformity, which is when, because our income tax uses federal income tax as its starting point, when the federal government makes changes to definitions of income or various credits and deductions, if we don't then conform or update our tax laws to mirror that, it can make the tax system more complicated for taxpayers. And so the governor suggested a number of federal conformity items in his budget. And actually those 2 things, that business-to-business repeal and a set of federal conformity items, actually has already passed the House of Representatives last week in a bill called House File 1777. Governor has also proposed some reductions in estate and gift tax and expansion in tax credits for things including child care expenses and various tax credits for businesses and investors. So in total, a $616 million tax reduction package for this budget cycle. He also suggests putting $455 million more in the state's budget reserve. It's been long advised that states put aside a certain percentage of their budget in reserves. If Minnesota did that, hit that target, we'd be at about $2 billion. And right now, between our existing cash flow account and budget reserve, we're at about half of that level, although it is the case that they are fully up to the levels that they are currently prescribed in law. And then finally, the governor's supplemental budget recommends $162 million in some limited new spending, things he describes as essential expenditures. And this includes things like an increase in heating assistance. That actually has already passed the legislature really quickly in the session. Some additional funding for school lunches, a rate increase for home and community-based service providers, and then addressing what's seen as some deficiencies in their current operating budgets for the Department of Corrections, for the MNSCU system, and the University of Minnesota. Now the legislature, the way the House and Senate express their budget priorities is not through a supplemental budget with details like the governor's budget, but instead they pass 2 things. They pass budget resolutions that simply set out the total amount of spending, total amount of revenues, and then how much is in the cash flow account and the budget reserve. And then they also pass targets, which says how much new spending or how much reduction in spending each of the different funding categories can expect. Those have not yet been set. We got a late start to the legislative session, so we haven't quite hit the point where those have been articulated. But we do know some of the priorities of the House and Senate through some actions they've already taken and through public statements that their leadership has made. So in the House, as I mentioned, they've already passed roughly $500 million tax cut bill that included the business-to-business tax repeals and federal conformity. We haven't heard as much about what the House might be interested in doing in terms of spending or the budget reserve, although it seems that of the three, between House, Senate, and Governor, the House may be the least interested in budget reserves. On the Senate side, in contrast, Senate leaders appear to be very interested in building up the budget reserves and expressing more caution about tax cutting. So the rest of this session, they'll need to be working that out and come to some compromise. Senate has also expressed interest in a larger bonding bill than we may have done otherwise, and in some cases potentially just paying cash for some of those projects rather than issuing bonds, and also have talked about the importance of doing some funding increases for services, long-term care, and other kinds of services. So we'll learn more of the details of what the House and Senate are interested in as the session progresses. And I can't tell you exactly what process they're going to follow for passing those budget bills because it is less prescribed in the second year of the budget cycle, and we've seen different models over time. I think what is more likely is they kind of follow a scaled-down version of the normal budget process in which they pass, for example, an education supplemental budget bill, a health and human services supplemental spending bill, a number of individual spending bills in the different funding categories. But it also has been the case in the past that sometimes there is just one supplemental budget bill that includes all the different funding categories. And we don't know yet which one of those processes the legislature will follow. What we do know is that the legislative bodies have set April 4th as a deadline to pass their major budget bills. And technically, the tax bill does not have to meet that deadline, although past practice has been to try and follow that deadline as closely as possible with the tax bill. I do expect the House to pass another tax bill after the one that has passed quickly already. And then the way the House and Senate work out their budget compromise is through something called a conference committee, which brings together members of the House and Senate. And it seems almost certainly the case that at the same time they will also be negotiating not just House and Senate, but also with the governor so that they can pass bills out of the conference committees that also will get the governor's signature. And they need to get all of that done before the legislature adjourns in the third week of May. So more to come. It's been a really fast-paced session so far, and I think we'll see in the next couple of weeks the legislative tax and budget proposals. We'll see the specifics of that as those start to take shape. So now I think we'd like to open it up for your questions.
Don't be shy. Send in your questions. Well, Nan, while we're waiting for folks to get their questions together and shoot them in, I have a question for you. So you talked a little bit about the governor's release of the supplemental budget and then the legislature's priorities on how they're going to spend this money and for this session. So how do those really impact low and moderate income Minnesotans? How those proposals shape out for that group of people?
Sure. Some of the things that we're keeping our eye on and working on at the Minnesota Budget Project is we think last year's tax reform bill was a really significant step forward towards a tax system that, one, raises enough money so that we don't have this kind of perpetual cycle of deficits, and we can start to better meet our needs as a state, but also moves us towards a less regressive tax system. And it made a lot of progress in that regard, but it is still the case that low and moderate income folks pay a higher share of their incomes in state and local taxes than those with the highest incomes, and we think more progress on that is a good idea. So we were happy to see there is a increase in the working family credit in that tax bill that has already passed, and I think a lot of interest in doing something on that this year. That's a really good tool for targeted tax reductions for folks who are working at low wages. We do think the state should make a down payment on building up a stronger budget reserve, it makes sense to us to build that up in good times because it definitely softens the blow when the economy gets worse, which it will inevitably do at some point. And then we do encourage that policymakers, as they are considering additional spending, take a look at the needs of Minnesotans who haven't yet participated in this economic recovery. And I'm sure folks on the call have ideas of good investments there. One we've drawn attention to is the fact that there's over 8,000 Minnesota families on waiting lists for child care assistance. And we think some more funding there would be a smart investment.
Mm-hmm. I have another question for you. So why do the top 1% pay so little in taxes overall?
Well, I wouldn't say they pay little taxes overall.
Sure.
And certainly if you measure it as total dollars,
of course,
they do pay a larger share. Part of it has to do with, and maybe I'll back up to that kind of share slide if I can, is that many of these taxes relate back to consumption patterns. And so if I make 100 times more income than you, I will have a nicer house, probably, and I'll probably pay higher property taxes, but I probably don't have a house that's 100 times more expensive than yours, and I probably don't buy 100 times more in other kinds of taxable goods. So part of it is a reflection that at lower incomes, people do tend to spend all of their income, and at higher income levels, folks are more likely to have income that they're saving, they're investing, that aren't taxed directly. So that's part of it. It has become more regressive over time, previous to that 2013 tax bill, and some of that also reflected that in the 90s, as the state responded to budget deficits, one of the strategies they used was to cut funding for local governments and sometimes also put more responsibilities on cities, counties, and schools, and that has created pressures on the property tax side. So if you have a regressive tax and it becomes a bigger piece of the total, that also makes your overall system more regressive.
Well, folks, I can keep asking questions, but we really want to know what you're wondering about. What questions did you have when you signed up for this webinar? Have those questions, if they haven't been answered, please feel free to share them, and I bet Nan has a really great answer to them. In the meantime, I'll ask you another question.
Okay.
How would you suggest nonprofits use understanding the state budget and the process for how the state budget is created to advance their policy priorities?
Well, I think there's a couple of things that nonprofits can keep in mind that strengthens their own advocacy. One is, even if what you are asking for at the legislature is not a budget item, knowing the schedule for budget decisions is important because that really sets the tone and pace of the legislative session. So just knowing where are the kind of quieter times in the cycle helps you know where to maybe focus your attention. Also, I think understanding the budget picture really helps nonprofits plan their advocacy. So for example, if the November forecast shows that there's a deficit, you might say, well, you know what, this is not the year for us to push on our new spending initiative. We actually need to get ready to defend the things in the state budget that are important to us. So I think it really helps with prioritizing and with planning, but it also helps, you know, these are kind of the budget and the big things are some of the things that legislators are thinking about, so then you can adjust your advocacy work, you know, so it's kind of in tune with the way legislators are thinking about the session.
So now your questions, folks. I'll ask one more question, and then maybe we can go to resources. Let's see, which question should I ask? Okay, so how do you, two questions maybe. How do you think the $1.2 billion should be spent, and what's the biggest investment you think to make in low and moderate income Minnesotans?
Well, some of the priorities that we've articulated around the surplus are these. First of all, we think they do need to be cautious on how much they do on tax cutting, and particularly looking at the long-term cost, because we definitely went through this experience in the 90s where we went too far on tax cutting, and that definitely made the following deficits worse and made it harder for the state to respond to the economic downturn. So I think being cautious in tax cutting, and again, having a focus on continuing to chip away on the regressivity of the tax system. So, we're continuing to talk about working family credit and other ways to make the tax system less regressive, but also not go too far on the tax cutting. We do think they should make a down payment on the budget reserve, and then again, that they take a look at what are some of the ways to invest in including those who've been left behind in the recession. So I know one of the things that is getting a lot of attention at the Capitol this year is the 5% campaign to increase funding for some of those community services that are important all around the state. I think there's going to be some other discussion about what other kind of spending priorities might come forward. That discussion has not, that's going to get more attention and kind of get the details more filled out over the next couple of weeks.
Well, folks, this is your last chance to submit your questions, and I'll give you a few more minutes while we run through the last slide. While Nan is getting to that slide, I'll just share with you that after this call is over, later today or tomorrow, what you can expect from us is a follow-up email. In that follow-up email, you'll have a link to this recorded webinar. You'll get a link to the resources that Nan is going to mention now and some others, and we're going to ask you to fill out a quick survey for us. Nan, would you like to go through the resources?
Sure. Well, I definitely want to point folks to our resources from the Minnesota Budget Project, our website, and in the email you're getting, we'll have a link to our resources section. That includes what we call our Advocates Fiscal Toolbox, which is a place where we've compiled many of the information sources we've talked about today. So that includes how you can find the governor's budget, how you can find the price of government, the tax incident study, how you can find legislative fiscal notes. I'd also refer folks to our blog, which is where we write about kind of current topics over at the legislature and what things are going on right now. We've already have some information there about the forecast, about the governor's supplemental budget. And then again, if going forward, if you have questions, you can also contact us for the Budget Project, at the Budget Project for help in finding those tax and budget resources that help you understand the issues that you care about.
All right, folks, that's all we have for you today. Again, we'll send out an email with some contact info if you have any follow-up questions. Thank you so much for joining us, and we'll see you next time. Or we'll connect with you next time.